TheoTrade. This is Don Kaufman. December 14th, 2020. Minutes left inside today's trading session with just a huge reversal underway. I mean, the S&Ps today traded 36.91 half, completely reversed down to 36.40. We're just a hop, skip, and a jump off that. The Nasdaq doesn't reverse, but I'll tell you what, the most important thing I think that you can take out of today's marketplace, also one of the most unusual aspects of today's marketplace, volatility is on the bid coming into, well, holiday sessions of trade. And that, again, really does speak volumes of the entire marketplace. Let's get to work. Let's actually describe a little bit about the reversal that we've seen in the S&Ps today, inside of the Russell, inside of the Dow. It's the Nasdaq that just happens to be ultimately the odd product out today. All right, so one of the first things is out of the gate this morning, it was once again what I kind of been coming to term Vaccine Monday. So there was news, of course, some of the first vaccinations in the U.S. have been done. Pfizer on the delivery. The marketplace bids up into it into the overnight session. Almost immediately today, we see a little bit of slippage in the marketplace. Some of the sell-side activity even got extreme here in about the last half hour. I'm going to see us bid back up a little bit. But, okay, this is kind of a tale of two vastly different marketplaces. As much as we might want to see the S&Ps get whacked back, and I'm going to get into in a minute here what sectors specifically drove some of the action, because again, there's volumes beyond just looking at the S&Ps today. Okay, the Nasdaq all of a sudden is the odd product out, but the Nasdaq too saw some fairly wild volatility really in just this last half hour of trade. In fact, you can go back the last 5 minutes after seeing a just wicked down move. Again, that, people, right there is about a 30-point move in the Nasdaq inside of 1 minute, only to see it rebound. But wait, there's still 3 minutes left of the trading day. We're not done yet. But the Nasdaq, okay, when you start to read into it, is not being driven by the monsters of tech. Again, the monsters of tech, your Apple, your Amazon, your Facebook, your Google, your Microsoft. They're not the drivers today. I mean, Microsoft, negligible, okay? Apple, down about 0.4%. Netflix has got a little bit of a bid under it, but that's not even necessarily large enough. So one of the mega market caps, Facebook, okay, up about 0.4%. All right, Amazon's a bit of a mover today, 1.4%, but that's being completely offset by Google being down today. So what do you come to? Tesla, okay? Tesla and a handful of other products, one of which, okay, we haven't looked at in quite some time. This has been a little bit of a sleeper, okay? But you have to take a look, briefly over at stuff like NVIDIA, which again, we haven't looked at in a while, but the market cap of NVIDIA, it matters, all right? So this is up about 2.4%. A couple of sleeper stocks today are actually helping prop up the Nasdaq. But as I said, it is not, if you will, some of the usual suspects, which once again are the monsters of tech. Now, digging into this a little bit here, before we actually get to the discussion of volatility and why volatility is so incredibly important, because it's unusual. Before we get there, okay, I think you actually have to break down the sectors themselves that really cause some turmoil and reverse this marketplace. And that is undoubtedly inside of the financials, but even more so than the financials. Okay, and I'm going to come back to the financials in a second. You got to look at the energy sector. The energy sector, this is an extremely large reversal. The energy sector actually opened bid on the morning, didn't just reverse, but it's got some hideous sell-side activity into it. This thing's actually going to be down almost 3.5% at the cash close here. I think the better way to kind of enunciate this, though, isn't necessarily just to throw a chart of an intraday and look at a reversal. I think the better way to look at this is to look at auto-expected moves, okay, of how vicious this Monday move happened to be. We actually opened higher again and came down and have literally tagged the lower edge of the expected move. Now, mind you, that's the expected move for the entire week. We've already tagged it here, of course, on Monday afternoon. Now, back over to the financials. Okay, the financials also speak volumes. Again, seeing a wicked intraday reversal, opened very strong, reversed almost out of the gate, pulling the S&Ps down with them. And when you start looking at the combination of the financials hitting some sell side activity, of the energy sector having some sell side activity, okay, and the monsters of tech, they were not enough at this point to prop those S&Ps higher, okay? All of a sudden, as I said, and I've been just incessantly mentioning this video after video, it's the financials, okay, that got us here in the S&Ps. They are absolutely now reversing. And again, if you look at auto expected move, the big takeaway here isn't we didn't tag the lower edge of the expected move. But I'd like you to look for just a moment at how substantial the range on the day happened to be. Your range in the day is, it's basically what? 70. There's the closing bell and some hideous sell side activity into it. Range of the day is about 70 cents. Okay. Now, if you take a look at, we're going to cruise over here to the Analyze tab on Thinkorswim and go to Think Back. Think Back is end of day data. So we're actually going to go look, though, okay, at, Friday's closing price. And again, we're looking at effectively Friday's closing price, which December 11th, the entire week was looking for about an 88-cent move, most of which, okay, we got today. And again, the financials have now literally closed almost on their low tick of the trading session. So it speaks volumes, okay, inside of today's session. It's not so much the index products. They didn't move that much, right? Well, all right, S&Ps are down 3%, Nasdaq's up 0.8%, but all of a sudden, okay, the sectors that have gotten us to this level in the S&P, gotten it to this level inside of the Dow, okay, have reversed in a very, very large way, okay? And therein lies why I believe that volatility right now is on the bid. One of the first things I want to display to you, when I talk about volatility on the bid, I'll start tonight, okay, with the VIX. Obviously, okay, a substantial move up in the VIX by the tune of about 6%. You can also come in here and you can apply auto expected moves even to the VIX. And again, it's a very substantial move of a tune of about 6%. But it isn't so much the VIX that is catching my attention. It's something I mentioned on the weekend video. It's the VVIX, the volatility of the volatility index. Now, the volatility of the volatility index looks at the volatility of the VIX, but it's about 30 days out. And why this is surprising, if you cruise into the VIX product itself and you look at the VIX options, about 30 days out, it only takes you to like January 13th. There's so much holiday trading here. I mean, there's basically 3 weeks of like holiday trade packed into a 29-day expiration, right? And you got 8 days here, a couple days there, a couple days. But the point that I'm making with this, all right, why is volatility bidding up when things should be quite docile? Of course, you could point out to the calendar, the FOMC is coming out on Wednesday. Nobody expects Jerome Powell to say anything, okay? We probably won't hear anything until, probably into February when Janet Yellen gets together. Obviously, Janet Yellen now is going to be running the Treasury as of January 20th. Janet Yellen will take a little time with Jerome Powell, and by about February, some of the FOMC meetings might get a bit more interesting, but I don't think anybody expects anything, okay, out of the FOMC or the, Jerome Powell's conference. I mean, I would actually put the Bank of Japan on, on a more of a pedestal this time around than the FOMC. So it's not so much data dependent. Again, I believe that the bid in volatility is predominantly because of the sectors, okay, that got us to these levels in the S&Ps had wicked reversals. The sectors that matter, the market knows it, okay? The monsters of tech, look at this, okay? Some hideous sell-side activity right into the close, right? Listen, tomorrow's trading session, it's going to matter because I'm going to tell you right now, you may look at the Nasdaq and say the Nasdaq, okay, it's the final hope. That Nasdaq, okay, will cave if the S&Ps start to go. Be very, very cautious in the days to come. Again, volatility is bid into some holiday sessions, and that does not bode well for the broader marketplace. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.